Kitco News special coverage of the PDAC convention is brought to you by Gold Mining and Uranium Energy Corp.
We're talking now with the former chair and CEO of the Ontario Securities Commission, Maureen Jensen. She's currently on the board of Franco-Nevada as well as FINRA in the United States, and she's here to talk about mining regulations as well as regulations in the crypto industry and what we can expect from regulators in both the U.S. and Canada. Welcome to the show, Maureen. It's a pleasure to have you.
Thank you for having me. Pleasure.
You're also going to be inducted into the Mining Hall of Fame this year. Congratulations. We'll be talking about your work and your career in the mining industry. But first, let's talk about the markets. Cryptocurrencies have been crashing, I think would be an appropriate word. Just today on Monday, Bitcoin is down $3,000. And it's not just Bitcoin and Ethereum and the largest Bitcoin cryptocurrencies, it's the altcoin space as well. In fact, even more dramatically. And if you take a look at what happened in the past couple of weeks, we've had cases like the Luna Terra collapse, which sank all the way to zero. And now people are starting to realize that not a lot of these stable coins are so stable, and they're calling for regulators such as yourself and your colleagues at the Ontario Securities Commission to really take a deeper look at this industry and what regulations need to be put in place. So, stepping back here, Maureen, and taking a look at the cryptocurrency sector, I know that's very broad, but what do you think needs to be done from a regulatory perspective that should be enacted and help investors?
So I'd say that, well, first of all, cryptocurrency, if you want to call it that, or coins, they don't really have anything that backs them. There's no disclosure. You don't know who owns them. You don't know who has put what into them. And they're not all one size fits all. So you have some of the coins like Ethereum and Bitcoin, which have been around for a while. And then you have other coins that are just starting up. Then you have non-fungible tokens. And it's not just the fact that the coins exist, but also that they're traded on exchanges. And those exchanges aren't regulated. So it's a lot to unpack. But first thing is, in Canada here, we have put some regulations in place for any cryptocurrency exchanges or crypto coins. And so that has been in place for some time, but many of these exchanges don't seek registration and then they don't follow the rules. So that's one issue. So it's how they're traded. And if we look back at some of the disasters actually that we've had in Canada, some of them where basically people were taking people's cryptocurrency, taking them off exchange, trading them in other exchanges, losing money, and then putting a non-existent token back on their exchange, just as not as anything that was actually there.
Can you name a few notable cases regarding exchanges?
Yeah, that one was Quadriga.
Yes.
And the OSC 2 years ago put out a report on what they found, and it was a basic fraud. And so, unfortunately, that's what many of these things are, since they don't really have anything backing them. But regulators are now looking at this. As I said, in Canada, we have some rules for exchanges. What you're going to see, and you've already seen in the SEC in the U.S., they're starting to look at. They've talked about cryptocurrency, but the CFTC has decided that they're going to put in some rules on cryptocurrency. But all the rules are different across the world.
Okay, well, can we just briefly touch on the Quadriga case and maybe summarize for our viewers what happened, whether or not it was intentional or whether company just went bankrupt, because people would like to know whether or not this kind of thing could be repeated for their money, because everyone has some cryptos on exchanges now.
Yeah, absolutely it can be repeated. If you are trading equities today on any of the recognized exchanges, you know that when you are buying or selling a share, you actually can get that share. And you are the owner of that share once you get it. Unfortunately, and those exchanges are highly regulated as to what they can trade, the hours of trading, there's oversight, they have certain rules they have to put in place for settlement. None of that exists with crypto exchanges. And so the problem is Quadriga could happen again. And
what happened exactly?
What happened in Quadriga is that they set up an exchange and they started trading some shares some Bitcoin that they had, and other people started opening accounts and putting their own Bitcoin in. But what happened was the principal of the exchange started trading with people's Bitcoins, and he took them off the exchange and traded them in other venues, lost money, and never disclosed that in any way. So people thought they still had a Bitcoin on their exchange, and there was nothing there.
Now, I've read that crypto exchanges across the world, they're not legally really obligated to provide you with your capital. If, let's say, you want to redeem your funds or you want to withdraw your funds, you don't actually own, let's say I go on an exchange and I buy Bitcoin. I don't actually own that Bitcoin because it's not in my wallet, it's not in my own personal possession. It's under the purview of that exchange, and they're kind of a custodian of my money, so to
They're
speak.
a custodian of your money unless you demand that you want it put into your wallet.
Right.
In many cases, they don't do that. And then when you go for settlement and you want to take it out, it's not available or it takes too long. So this can happen to anyone.
Is that how brokerages work in Canada for stocks?
No, that's why I'm saying brokerages and exchanges have very strong settlement rules and obligations. And so, for example, after 2 days, you get your certificate if you wish, or it goes into your account. We are T+2, or T+1 is where most of trade plus 1 day is where most of this is going. There are people that have had bought and sold Bitcoin and haven't been able to get their coins out for months. The problem is that there's no obligations on those exchanges. They are not regulated.
I'll cite a case that just came in from the news today. On Monday, I'm just going to read the headline in the first paragraph from a Financial Times article, Maureen. It says, Bitcoin tumbles after crypto lender Celsius blocks all redemptions. And Binance on Monday, Binance being one of the world's largest crypto exchanges, halted withdrawals of Bitcoin for several hours after crypto lender Celsius also blocked customers from pulling funds from its platform, citing extreme market conditions while digital assets slumped in price. Now, there's no regulation currently put in place to say that they can't do this, right?
That's right. That's right. So essentially, they're operating unregulated. And when you have a market run, they may have things offline in cold wallets. It may not be in the exchange itself, or they just may not have it. And so when they have extreme conditions like this is exactly what happens.
I don't think that, look, I don't know how this is going to be resolved, but I don't think that Celsius and their peers are looking to block all redemptions indefinitely. Maybe it's just during periods of heightened volatility. But this is not the first time that we've seen this in the crypto industry. Should that be allowed, though? I mean, when you think about it, maybe it makes sense to prevent further volatility from preventing withdrawals and redemptions.
Well, so let me just say that traditional exchanges, certainly all of the big ones right now, they have volatility controls in place where when you have a sudden spike or a sudden drop, there will be a circuit breaker that goes in place for a few minutes.
Like the NASDAQ or NYSE in the States.
And so that's so everything can catch up. But it's not like you just say, from now on, we're going to block redemptions for the rest of the day. What's happening here is that these exchanges don't have any regulation. They don't have any protocols under which they're operating, and that's risk for investors.
Well, okay. I mean, the crypto industry isn't entirely nascent in the sense that a lot of these coins have been around for a long time. A lot of these exchanges and lenders and banks have been set up for quite a few number of years now. So people are asking, Maureen, whether or not regulation will come soon, and if so, when? More regulation, that is.
Yeah, so I would say that this is something that most regulators have been completely involved with now for the last 2 or 3 years. And there's a lot of global discussion going on, but there's a lot of regional discussion as well. And as I said earlier, that in Ontario, there are protocols now for crypto exchanges. However, we have to see this go across all exchanges.
Okay.
I think it'll come with time.
Yeah.
But there's still an argument about whether, is it an equity? Is it a currency? Is it a commodity?
So the CFTC in the U.S. recently has been given authority to oversee cryptocurrencies or digital assets, and digital assets have been classified as a commodity. Not all digital assets are exceptions to this rule. They're using the Howey test to determine whether or not something is a commodity or a security. But overall, I think digital assets, if you want to group them together, are now being viewed, at least regulated, or will be regulated as a commodity in the U.S. Do you agree that they should be regarded as a commodity and not a security?
Well, we've had a lot of discussion over the last few years.
Yeah.
I'm currently not in the regulatory industry anymore, but I know that the discussion has been for a long time that most of these look like equities.
Okay.
And so it's a matter of how they're traded and where they're traded.
Okay. Well, what are the differences for regulations, just from a legal standpoint, between a commodity and security? If let's say Bitcoin were classified as a commodity versus Bitcoin being classified as a security,
it's just a matter of what rule framework it operates under.
Yeah.
So they all have the same kind of goal, and that is investor protection. So if it's in a commodity, what it would be is those exchanges would be overseen by the CFTC, and how they would be traded and reported would be under CFTC protocols. If they were deemed securities, it would be under the SEC protocols, or here in Canada, the Securities Commission protocols.
Okay. But for investors, is there a difference fundamentally between owning a security or owning a commodity?
No, it's the issue is still how to protect investors and how to ensure that what you think you are buying, you are actually buying.
We're going to move on to mining, but just one last question about cryptocurrency. So suppose an investor were to come to you, Maureen, and say, hey, look, I want to invest in this new project, this new token, in this new crypto, if you want to call it. I don't know much about it. I don't know if I'm going to get frauded. What are some of the red flags I should look for?
All right. Well, there's a lot of red flags. First of all, you have to know what is this coin? What is backing this coin? Who's developing this coin? Where is it going to be traded? You have to really see, are these good players in the industry? Do they actually have capital behind them, or are they using you for capital?
Okay. Some would argue that not advantages, but one of the draws of cryptocurrencies is that project leaders don't have to currently disclose all this information. So there's this
you don't know who you're dealing with.
aspect of anonymity that some people cherish. I mean, is that something that you think should change or not?
I think it should change. I think the value to me on Bitcoin is the underlying blockchain. It's not the Bitcoin itself. I think we're all going to go to digital assets at some point, but what you want to do is be sure that you're dealing with credible players and that whatever you buy, you actually get.
Let's talk about mining and macroeconomics. You have recently said in another media article that you think that the world is bifurcating into two blocks, the U.S. and then Russia and China on the other side.
Yeah, the Western and the Eastern world.
Yes, the Western and the Eastern worlds. First of all, tell us about this development and what that means for investors going forward.
Well, I think we're going into a period of volatility. We already know that. We're going to have inflation. We're going to have issues about the supply chains. We're going to have problems with supply chains. We've already seen what happens when we have, in the Ukraine, for example, suddenly we have a Russia-Ukraine occupation, and now the price of oil is skyrocketing because the Russians have reduced their supply of gas, oil and gas, I think, by 40% over the last month or two. And so I think this is really showing people that this global world that we had is at risk once it starts to bifurcate because of these kind of tensions.
Why would there be more risk or more uncertainty? Wouldn't you expect these two blocks to cooperate and have bilateral trade agreements?
I'm sure we do already, and I'm sure we will try. But what we have right now is armed conflict, and it's not going away. And I think we're going to see some upheaval in the Eastern Europe. And I think we're going to see a more militaristic China. And so because of that, I mean, China has been buying up very strategic metal supply for a long time. Yeah. And so we have to start thinking about what is this going to do to manufacturing in the Western world.
What are the chances or risks of China or Russia weaponizing their strategic metals reserves and essentially cornering the market on rare earths, and things like lithium.
Well, I think that's the risk. And that's what people have to start thinking about. So we have to start thinking about broadening our supply chain. We have to think about not only what we consume, but what we produce.
Is this something that North American miners and North American regulators or governments have been in talks about? Maybe perhaps, the Biden administration recently invested a couple $1 billion in domestic lithium production.
Of course. I mean, as soon as you have armed conflict anywhere in the world, you're going to start thinking about what do I need to ensure that I'm safe, that I can build my infrastructure, I can still manufacture cars and airplanes and all of those things that we need to have a life.
One major issue that everyone's facing, not just consumers, but investors and those miners especially, is rising costs and rising inflation. All-in sustaining costs of the producers have gone up dramatically over the last year. So you're on the board of Franco-Nevada, for example, and Franco-Nevada is a royalty company that works with a portfolio of a lot of different miners. So you have your finger on the pulse of what the mining industry is doing. How are miners combating inflation right now and rising costs and shrinking margins?
Yeah, well, as you know, Franco is a royalty company, and so it doesn't take risk for the underlying costs. However, it's something that everyone in the mining business is worried about. So just like anybody going to the grocery store and filling up their car, businesses that are producing gold, base metals, lithium, whatever, they're facing rising costs. So what you're going to have to look at is how can you keep your margin and ensure that you have alternate supplies for certain things. I think what you're going to see is the really high cost production mines are going to be stressed while we're in this inflationary period.
What is the industry doing right now to cut costs?
Well, I think the industry has always been very focused on costs. It doesn't spend anything that it doesn't need to spend. I think what's happening now is on top of all of this inflation, the miners are faced with ESG pressure. So they're faced with not only producing, but producing now using electric vehicles as opposed to gas-powered vehicles, all of those things. So we're going through this massive change. It's not just a political change, and it's not just a macroeconomic change, but we're seeing a whole boomer change. That we're seeing the rise of the millennials. We're seeing a lot of people who for years have been told mining's not a good business to be in.
Sure.
It's an excellent business to be in, but we have to make sure the culture accepts young people.
Okay, let's talk about young people, millennials, and perhaps the younger generations, the Generation Zs. How can they be involved in the mining industry? In other words, what can the mining industry do to attract recent college graduates who are flocking to tech or finance or for fintech? Not a lot of my friends that I know personally have gone into the mining industry, I can tell you that. So is that a concern for you that you're fighting or competing against other industries for talent?
Oh, absolutely. Everybody is fighting against every other industry for talent. This business, this mining business, is an incredible business. You start out with an idea, you get some really smart people together, you put some money into the ground, and you find a deposit, and the next thing you know, it's a long time, but you're pouring gold. That's an amazing wealth creation. And this can be something that is an amazing career. It's been an amazing career for me in the first half of my career. And I think it can be for many young people because you're working with really smart people trying to fix really difficult problems. But at the end, you produce something that is so useful and amazing.
Well, let's finish up on your career. So as I said earlier, you will be inducted into the Canadian Mining Hall of Fame alongside such legends as Ian Telfer, so congratulations. This is a tall order for anybody. You've had a long, storied career in the mining industry before you started working in finance and the regulatory side. Tell us about why you decided as a young person back then to enter into geology, which is what you were.
Well, I was sunk right from the beginning. I grew up in mining towns.
Right.
So my dad was a mining engineer, but I was going to be a doctor. Medical doctor, and I had a half course left to take, and I took a geology course, and I was completely sunk by Christmas. This is what I wanted to do with my life. I've had a fantastic life. I've traveled all over the world, worked on amazing properties. It is an incredible life, and you can make it whatever you want.
You've seen the mining industry advance and evolve over the last many decades. Tell us about some of the metals or minerals you think will be most crucial to our societal development over the next few decades, even beyond our time?
Well, first of all, everybody knows that we're going to need battery metals,
Yes.
right? So cobalt, lithium, copper, but all of the base metals, right? Copper, lead, zinc, silver and gold, because it's in almost every electronic device that we use. So all of those are going to be necessary. Manganese. Right now, there is a ship out near the Cook Islands looking at how to mine deep sea nodules that are full of manganese. It's an incredible journey to be in this business. And there's an old saying in mining, if you can't grow it, it has to be mined. That's the way it is. I mean, if you can't grow something, mining is the way everything is made. So, great career.
Excellent. Thank you, Maureen, for coming on the show. I appreciate talking to you.
Thank you.
Thank you for watching Kitco News. I'm David Lin.
Kitco News special coverage of the PDAC convention is brought to you by Gold Mining and Uranium Energy Corp.